Welcome to your real estate market update for February 2024. Now, in this month's update, I'm going to start by giving you an overview of what's happening in the market overall. I'm going to share the latest home price and mortgage rate projections for 2024. And yes, they've just been revised again, so you're going to have to stay tuned to see if that is up or down. And then I'm going to turn my attention to the local markets here and share what's going on specifically in Frisco and Prosper. We've got a lot to cover, so let's jump into it right now. Hi, this is Andrew with the Andrew Smith team, eXp Realty in Frisco, Texas. And what's really interesting is that although the numbers have improved, a recent survey by Fannie Mae showed that 24% of all Americans still believe that home prices are going to decline in 2024. And it's understandable. I mean, there's a lot of negative headlines and negative news out there currently, along with just general uncertainty. What's going to happen with the election? What's going to happen with the economy? The numbers just generally seem mixed. Now, my goal in this video isn't to try and convince you one way or the other, but I just want to share the facts. I want to share the actual data that is the latest that we have available right now so that you can make your own decision. I'll help you interpret that data, but I'll give that to you so that you can decide what is best for you and your family, as that is the most important overall. If you remember going back a year ago, there were all kinds of calls and reports or expectations, predictions that we would have a full-blown market crash in 2023. And it just didn't happen, even though mortgage rates approached 8%. Now, if you take a look at the Case-Shiller, I should say, home price movement for the top 20 cities in 2023, you'll actually see that every single one of the top 20, with the exception of Portland, had positive price appreciation last year. In fact, the national average was 5.1% appreciation year over year. And Portland, the one market that was down, was only down 0.7%. So less than 1%. It almost doesn't really even count. It is looking, based on the information that we have so far, that 2024 is going to be another strong year. And what's important to point out is that rather than having runaway price appreciation, like we saw in 2021 and the first half of 2022, the markets right now seem to be returning to normal. They're in a recovery mode, if you like, and that we are starting to see still appreciation, but at historically acceptable, normal levels. Yes, there's still an affordability issue. Perfectly, 100% agree with you on that. But it's going to be solved more than likely through mortgage rates and not through home prices. Now, if we look at the latest forecast from 8 leading institutions that was released just on January 29th, you can see that all of them are showing price appreciation. They are all green bars, with the exception of Realtor.com. But I should point out that the Realtor.com forecast has not been updated since last November, and a lot has changed since then. As a matter of fact, if we go back and look at all of the other financial institutions and what they were forecasting in November compared to what they are forecasting now, you can see here that all of them are revised their forecasts up. Goldman Sachs, 1.9 to 5%, so just over 3%. And that 3% revision up is pretty typical across all of them, except for Freddie Mac and the Home Price Expectation Survey, which are a little bit lower. Now, I completely expect when Realtor.com release their new updated price appreciation forecast for this year in the coming weeks, that we are also going to see that that has been revised upwards as well. Now, one of the reasons home prices didn't fall in 2023 as expected even in the face of lower buyer demand and higher mortgage rates, is due to what has become known as the lock-in effect. And what the lock-in effect basically is, it's saying that, look, if someone has a 3% mortgage, they're not moving. Unless they absolutely have to move, why are they going to? Why are they going to trade that 3% mortgage for one in the sevens? And the answer is they're not, and they didn't. So housing supply last year actually fell. And if you like, that created a floor for home prices. As a matter of fact, Mark Fleming, the chief economist of First American, recently noted there is reason to believe that the lock-in effect will ease modestly this year as mortgage rates come down. And you can only imagine if they got below 6%. Can you imagine what would happen? How many more buyers that would bring into the market, and hopefully more sellers as well. And even then, more people would again be in the money, and homeowners will become less anchored to that low rate that they got just a few years ago. Now, we're already starting to see that overall, as the latest numbers show that new listings are currently running 14% higher than they were just a year ago. And assuming that rates do continue to come down, that trend should continue. Now, while there is a lot of volatility in the mortgage rates right now, rates are expected to continue trending down overall. In fact, Doug Duncan, who's the senior VP and chief economist at Fannie Mae, said, "We anticipate that after the past several years of extreme volatility in interest rates, the 30-year fixed rate mortgage will continue to moderate over the course of 2024, moving toward a rate below 6% by the end of the year." And that would be huge for people. Now, it's important to remember that they're forecasting for rates to continue their trend down. That doesn't mean that we're not going to see spikes up and down over the coming weeks. We saw one with the latest economic data just in the past week, but overall, the trend appears down. And as a matter of fact, here is the latest forecast rate projections from Fannie Mae, and they have just been revised again from where they were in December here in January. So now they're forecasting an average of a 6.4% rate in Q1, 6.2% in Q2, 6% by Q3, and 5.8% by Q4. Now, I should point out that there are many experts and institutions out there predicting that we will see 6% or lower by summer. Now, whether or not the fact that the inflation numbers for January were slightly higher than forecast, which caused rates to bump up just a little bit, whether news like that delays that, so it's closer to this Fannie Mae forecast, we will just have to wait and see. Now, as we turn our attention towards Frisco and Prosper, we really have a tale of two different markets. We've got the resale market and the new construction market. And as we all know, there is no shortage of new homes being built here locally. In this update, what I am going to do is I'm not going to take a look at what the closed sales price trend has been. That's a little bit like looking in the rear view mirror. And bear with me on this. So think about this, that the homes that sold in January, closed in January, those were actually listed for sale between late September and early November. And since that time, mortgage rates have fallen over 1%. And we're in a bit of a different market now than we were back then. And while it's important to keep an eye on that pricing trend, as mentioned, the new construction that we have in the market here can skew those numbers. So there's a lot of volatility from month to month. So what I'm going to do today with you is actually share what the current data is telling us about what we can expect to see with regards to home prices in this area over the coming months. So I'm going to share my screen with you now. All right, so the screen that we're looking at now is actually taking a look at where homes are selling as a percentage of the original list price. It's important to point out that this is the original list price, Not if they've done any price reductions, but this is where they are. Now, for Frisco, you've got, for January, you've got homes selling at an average of 96.5% of their original list price and 95.5% of their original list price in Prosper. This chart here actually does a great job of showing exactly what our market did. So this far left here is all the way back to the beginning of 2021. This is right at 100%. And you can see homes were selling well over 100% of list price in 2021 and for the first half of 2022. This point right here is when our markets locally peaked. And then there comes the decline. Prices were being slashed quickly. Buyers pulled back as mortgage rates soared, and that dropped all the way back off. We recovered some in 2023. And now 2024, as we move into it, this trend line on the far right side here is kicking up once again. This is important to keep in mind, especially as I show you this next page. So this, what we're looking at right here, is the median list price for homes in Frisco. And the reason I'm showing you list prices is because list prices are giving us a window into the future. As I just pointed out, in Frisco, homes are selling for within 3.5% of the list price. And this shows the list price trend. Now we can see here the dark blue line is the 90-day trend, and this dotted line, which is more volatile, is the 7-day trend. 7-day trend is more volatile because you never know what the mix of properties coming on the market is going to be from week to week. Is there going to be a higher number of homes at the lower price point, a higher number of homes at a higher price point? That's why there's more volatility in the week-to-week numbers. But you can see here that the 90-day average in Frisco is 730,411. So we know that the 7-day average is 778. So these numbers are going to start to move together as we move forward. That's very typical as we move into the spring market here. So if you discount that number by 3.5%, that kind of gives you a rough idea that somewhere around about 715, 720, all the way up to about 740 is where we're going to start to see closed sales prices in April. And then that is more than likely going to continue to trend upward. Now, if we look at Prosper, it's very, very similar. This is Prosper, except these numbers have already come closer together. So as of right now, February 9th, 923,000 is the 7-day or the 90-day trend. 935 is the 7-day trend. So when we look at that trend, it's important, as I mentioned, because we couple that, if I look at it, with homes that have had a price decrease. Now, when a seller puts their home on the market, they generally don't list it at a price that they're going to have to continue to discount over and over again in order to get it to sell. If you have an agent that's telling you that, or you're having to do that, call me, because that's not the strategy to get you the highest price possible. But it's important to see here, the important thing is the trend line is heading down, right? This is Prosper. If we look at this exact same graph in Frisco, again, the trend line is heading down. What does that mean? That means that the market is strengthening. Buyer activity is picking up, and sellers are not having to do a price reduction as often before that home goes under contract. That is strong evidence of a strengthening market. So we've got list prices that are trending up. Price reductions are trending down, which tells us the overall pricing projections going forward are on an upward scale. Now, the last thing to point out with this is inventory and the supply of homes for sale. Now, it's generally noted or accepted that a 6-month supply is considered a balanced real estate market. We haven't seen 6 months in a really, really long time. And even though the number of homes coming on the market currently is trending up, you still only have a 1.8-month supply of homes for sale in Frisco and a 2.1-month supply of homes for sale in Prosper. So it is still definitely a seller's market, but that's not to say that deals aren't out there, especially when it comes to new construction. So if you're in the market for a new construction home, you can get some great deals. That's not to say that you can't find them on resale homes as well. You absolutely can. If you've got questions about that or anything I've covered in today's video, I invite you to give me a call. My number's up on the screen now, or shoot me a text, and I'd be happy to set up a time to talk to you in more detail. And if you want to be able to keep up to date on this information each and every week, I invite you to subscribe to the weekly market report that I put out. Those graphs and charts that I was just showing you for Frisco and Prosper are straight from that weekly market update. I email that to you each and every week, and it's available for any city or zip code, not only locally, but in the entire country. So today, I thank you very much for watching. Hopefully this helps answer some of your questions about where this market is heading. And please stay tuned for one of these videos coming up next.